All right. What is going on? What is going on? Quick member training. Let's do a little by request, a lot of Fibs 101 as well. We're just going to do some basics. All right, we'll look at a couple charts. We'll just do a little basics just to be able to help you build your confidence and use this on what I think is more important, the higher time frames, okay, because the support and resistance is going to be much stronger on the higher time frames than they are on the smaller time frames. But of course, you're then looking for that engulfing candle in either direction. Okay, so let's see here, ironically, where this kind of flipped on us. Okay, now I think everybody here has a little experience, but you can find the fib retracement tool right over here on the left hand side of TradingView. Okay, and actually, before I hit that tool, one thing I want to show you is, right, this here is where you can see where price had come back up, and this is a definite move down. I think we can all see that, right? So we're going to mark this up as the highest point, okay? And then we're going to look for where price made that distinctive move up, okay? Not one or two candles, but it's starting. It's made a distinctive move up, and so then you want to put that here, okay? And then those are basically going to be your 2 points, okay? Your starting point, because you're going to start from the swing high down to the swing low. Because what you're looking for in this journey up is you're looking to see where price may eventually reverse just based on Fibonacci levels, okay? Now, what I like to do as well is if you look at this here, right, this is where price began to change. And of course, we're going to draw a fib level, right? But I always kind of like to draw a line myself real quick just to kind of look and say, okay, that is a nice area where you can see here, price has shown strong resistance, right? False breakout, strong resistance, false breakout. Not a false breakout, but it went higher, and then strong resistance. So, it's come there 5 times, so it's a good area. Then what I like to do is kind of compare it to when we go to the fib level. So if you go to your fib retracement, I use the wicks. So I'm going to go wick to wick. Here's the wick. I'm just going to stretch this across to get more of the chart, right? Now, you can see here that this kind of fell within the range that we normally look for, okay? So on this fib level here, okay, you know that if you click here, okay, you're going to get the settings, okay? You're going to get the settings. And you can add, right, various settings there that you may want to add as well. Okay, you can always change this and add different settings. I purposely don't include that 78.6 because I like this gap area to look at, right? I like this zone because we know that levels are never perfect. So for me, it works. If you wanted to add a 78.6, for example, right, you could just click here and then you can add something else there, and you can add as many fib levels as you want here. Obviously, you can change the color, right? I don't mess with that. And the visibility, I want it to be at all the different price ranges, so I don't mess with that. The only thing you really need to change here is what color you want the fib level, if you want your permanent fib level to change, right? And then how do you want your line? I want my line to be straight. You can change this thicker, right? You can make it thicker like that if you wanted to, okay? And so you can do different backgrounds there, right? Everything else here I don't touch. And then if you want to save it as a template, you could save it as a template, and then you can just click OK. Okay. So the reason why I like to do that is because it kind of gives me a visual. Number one is by placing support and resistance, right? It kind of like validates that as price is going up, I understand that there is a level of resistance up in this particular area. Okay. So this is on a 4-hour chart on AUD/USD, right? And so this begins to give you clarity, right? As price is coming up, this is the area that you would be looking for some type of reversal. Is it always going to reverse there? No, we know that, right? Because if you actually look at this candle here, they came only really for about 40% liquidity of that candle, okay? So what this is telling me on AUD/USD, just by looking at this, is yes, we got a great reversal. This is, from here to where price is now, it dropped 40 pips. But when I look at this, fib levels are to give you where you can get that reversal. That doesn't mean that this is going to tank now all the way down. It's just a Fibonacci area that may or may not change, right? May not reverse on you. This is probably going to go back higher because they're probably going to come back up to grab the liquidity there, just like they did here. But today's class is just about where you can set up your fibs. So where can you look and kind of build a case on your Fibonacci levels on where you're looking for possible reversals. And this is why I like, the higher time frames for this. Okay. So let me just stop here real quick. Based on this scenario, is there any questions as to why did I put the fibs here, the levels of the fibs, or anything real quick in the chat? Okay, is that pretty self-explanatory? And I'm going to walk you through different time frames to give you more perspective on it. Okay, so that's the 4 hour, and you can see here if you were to go to AUD/USD and you were to swap over to the 8 hour, okay, 4 and the 8 hour are pretty close. Okay, 4 and the 8 hour are pretty close. Okay, they're not always going to be perfect, but for the most part, they are pretty close. Okay, so let's just go over to another chart and let's pick GA. Let's remove any drawings. Let's go back to the 4 hour, and then let's take a look, because the fib levels will also give you, okay, areas of where you need to get out. Okay, it's not always going to pause right at that particular fib level. What I'm more importantly concerned today is that you can recognize why you would draw your fib there and justify it to yourself. Okay, so let's take a look at a couple of areas. Okay, and of course, once price is swinging up, you want to look for that swing back down to look for the next bounce. That's really what fibs, are kind of like known for. Let's first go to this little area right here. Okay, and the reason why I would pick this area here is because even though this wick is down here, okay, this is where price began to pull up, and then eventually price continued. So I would like to use that point there, okay, and then here we can see a distinct reversal coming back down. Now you can just tell that by the naked eye, okay, this particular retracement level came nowhere near where we would normally expect to take our trades, right? This one came only down to the 38. What this does for you, though, is it validates that this fib level are areas of support and resistance, okay? And this is why, even though you have this level here, okay, if you go over to your right a little bit, you can see if you were to extend this original fib that you drew, okay, and just go over to your right more, keeping it the same fib level, look what this does for you. Like this, when price then came back down, now this is the area that we are looking for that fib levels, right? And this came right into that 61.88 area. And this is where this particular box area, right, you're going to miss some trades sometimes because maybe you want to go deeper into the box and it doesn't. It just reverses. Oh, well, you just didn't catch that one, right? You just didn't catch that one. But here's the magic. Let's say that you were, like I am I'm very picky. I try to see if I get the Kmart blue light special down here, but I missed it. Okay, that's okay, because what you want to do then is you want to say, okay, I'm on a big time frame here. I'm going to start my fib level now from here, because this is the low point to where price showed signs of reversal, and it happened up in here again, and again you get the 61.8. So between the 61.8 and the what would be the 78.6, okay, those are your ideal areas. So you always hear me talk about the 100. Remember, the 100 will always line up with the most recent low if you did the fib correctly. So if a candle was to come down below the 100, okay, that would technically be your exit if you were going to exit the trade, because that could signify a trend reversal, right? How? Well, look right here. Let's extend the fib. And what happened here? Once price closed below the 100, what happened? We have been falling now for another 126 pips, right? So we have a reversal of the temporary trend, right? And ironically enough, look where price bounced. Price bounced off the next lowest fib level, which is here, because fib levels, when done, pretty close, act as support and resistance. We had a perfect bounce there, we had a perfect retest here, and we had a perfect test here. So this is why I'm so big on fib levels, because if you can have a fib level on a chart, on an 8-hour chart, you can leave it all week and you've already have your support and resistance for the week, right? Until it breaks below the top one or the bottom one. You can pretty much have a pretty good idea of support and resistance just off one 8-hour fib level, okay? So now if I was to delete this fib level here, okay, let's take a look at this arch right here just to kind of see what happened. You would grab your fib level and you would go from this low right to where price reversed, which is up here, and come right back down here. Now, look at the magic of this thing, right? We touched the 100, but we never closed below the 100, right? So what did price do here? Price came a fourth time to a strong area of what would be called supply and demand, or in this case, obviously support, right? So this is where you've got to look at the totality of the circumstances and tell yourself, okay, I'm looking to catch a trade in this area, right? I have this liquidity zone here. Okay, that's being met. And again, this is why I spend so much time trying to show you that you've got to look at these big liquidity candles where there's very minimal wicks, where price has not yet fulfilled that candle. And if you look at this small one right here, same thing, because if you look at this candle here, when this candle opened, there was no wick down to grab some liquidity off the candle. They opened and boom, took right off. You see it? No wick, just took off, right? So this price down movement, right? If I'm looking at liquidity candles here, I'm going to be a little bit more patient and saying, why would I want to try to take this up closer to the 61.8 when I know that there's two possible liquidity zones here that they may come fully down for because they're greedy. So I'm going to be more patient and trying to let this thing get closer to the 88.6. And if I take the 88.6, look at the price difference, right? Between the 88.6 and the 100, you're talking about 20 pips. You're talking about 20. If you got in at the 88, you're talking about a 20 pip drawdown type of thing. And then what does price do? Price ends up bouncing because we never closed below the 100, right? And then at that point, price ends up closing full liquidity, right? Reversing and then heading back up to, even on these three candles right here, 4 candles, right? 86 pips because we never closed below the 100. But when we did close below the 100, okay, right here, okay, this one would be very sketchy if it closed or not, but let's just say it didn't. Now we have now we have a definite closure below the structure point, right? So all this has to do nothing with structure. Then they came back around again and they tapped it again. So you've got your fib levels. They tapped it again one more time, right? And we're sticking at a higher time frame. We're not even looking at the 1 hour where you can obviously get, you're going to get SAR confirmations. Like you can begin to see this in a different light. I already know that this right here, see, and these are the telltale candles. Even though this is a Fibonacci training, the fibs help you see the charts a little bit better because you have an area. Like this is your go candle. This green candle right here, this is like, oh my God, I am bouncing off support, and there is my bullish engulfing candle off a Fibonacci zone, right? And of course, if we added the SAR, we know what's going to happen, right? The SAR will begin to appear because of break of structure, okay? So understand that that is your go candle to go in if you didn't get in because you were worried this was going to close below, right? Same thing over here. Came all the way back to retest support, right? This is going to be your candle where you're going to see that SAR because that is your candle that broke that particular zone right there. And again, this is why we talk about understanding, and this is why the fib levels are good for you, right? If you are looking by the time you open your chart, if you're at this candle here, right, I would advise you not to take your buy because your fib level is an area of support and resistance. Why would you want to take a buy when you're nearing the next level of resistance? That wouldn't make any sense, right? So having fib levels will also give you the opportunity to maybe not get into a trade late because by the time you got to your chart, you jumped in late and what have you. Okay, so let me stop there. Let me take a look at the chat, see if there's any questions. I want to make sure that I'm explaining it as slow as possible. Is that making sense so far? Drop the number 5 in the chat if so far this is making sense before I go to another chart. Okay, let's go to AutoCAD. Let's delete this. Okay, so now let's go to a small time frame, because a lot of you, like myself, right, sometimes we live on a smaller time frame. There's a lot of value on the smaller time frames. Okay, a lot of value, and I'm just going to go back in here, and we pick a lot of value on the higher time frames. So let's just pick an area here, and I want to make this bigger so you can kind of see it. And this is if you trust the process, and if you stick to the process, and you are, again, we'll be talking a lot about this starting on Sunday for those of you that are going to be in the mastermind. If you can stick to one set of rules as part of your arsenal, and you just stick with it, and you tell yourself, no matter what, I will not violate that rule, you're going to see your win rate go up tremendously. You're going to see your win rate even on a smaller time frame. Okay, even on a smaller time frame. So let's walk through some of these examples because I want to show you this. And then what I want all of you to do this weekend is spend some time and go do some homework, right? Those of you in the mastermind, we'll see you on Sunday. But for the rest of you, do some homework. Like get into your favorite pairs, right? And even though we talk about the value of I believe the fib levels on the higher time frame, right? Once you begin to train your eyes to do this, you can mix and match your trading style, right? So let's draw a couple of fibs and let's just see what we got, right? This is the highest point. Price came down to this lower point right here, right? Well, before we got the reversal, okay? And again, you could have even put it on this red wick candle. Let's say you thought that it's no difference. You're talking about a 2-pip difference, okay? So if you told yourself, no matter what, okay, you will exit a trade at a closure of a 100, and you will enter a trade somewhere between the 61.8 and the 88.6, okay? We're not going to use SARs. We're not going to use anything else, okay? Because I could basically tag this here, and then I can drop all the way down to a 1-minute chart. Okay, and this is, I haven't really gotten into showing you trading on a 1-minute chart yet, because I think right now many of you may or may not be there yet, but we're going to get there. It's on my list to look at, right? But look at the power of just going from a 15-minute chart to a 1-minute chart and looking at the price action, and then looking at a simple, oh my God, Armando, I need another confirmation. I need another confirmation because I'm not sure. And there's your aggressive SAR that you could add that gives you validation, okay, that because this little level was broken on a fib level, you have another confirmation. And then if you want to go into, the next, another one, right? The SAR perfectly lines up with the candle closing below the fast-paced SMA that I gave you, which is the 9, okay? So again, this scenario basically looks, now, mind you, we are on a 1-minute chart. Understand that. These are 1-minute candles. But the theory doesn't change, right? The theory doesn't change. Look at your drawdown off a 1-minute candle where that would have been stop loss just because you marked up a 15-minute fib level on AutoCAD, right? That's your original stop loss, okay? Now, of course, we're not going to keep it there. You've got your confirmation here, and as price begins to, again, original stop loss. So these are just little shakeouts, and a lot of people will panic here. I don't know why you would panic here, okay, even on a 1-minute chart when you're down 1 pip. You're down 1.4 pips, people. Like, what are you panicking about? And as this begins to come, so off a 1 minute chart, obviously you can't expect 30, 40, 50 pips on a 1 minute chart, but this is the beginning, right? Think about it. And this is the hard part. This is the beginning of this. Look at this. This is the beginning of this on a 1 minute chart. Okay, remember we started here. That is the beginning of what we did over here. Wherever over here is. Where are you? Okay, well, we started over here. Nothing happens on the 15-minute chart without it happening on the 1 second chart, 5 second chart, and lower charts. So everything started here, based on 1 fib level. So when you, I love the SARs, but not on the charts all the time to muddy my view. So everything started there, right? This drop here that started from 1 fib level, right, started on a 15-minute level, but you could drop down to the 1 minute and you can begin to see what price is doing. And if you're looking at lower lows, lower highs, it shouldn't scare you. Okay, it shouldn't scare you. Okay, so we took a look at this U shape and we took this candle down. Now, if you look here, let's go to the next U shape. So people say, how can I get multiple entries? Well, we had one shape number 1. So let's say that was scenario number 1. Let's take a look at scenario number 2. Price then comes back up. Again, we're on a 15-minute level to our low. We stretch across. Where did price come to again? Right into the level again, right? Because this validates to you, right? Does everybody see what's happening here? Because price capped itself here and failed to make a higher high, there needs to be a descent begin to happen. This begins the lower lows and lower highs off 1 fib level. And once you can train the eyes to see this, then you are just doing what? You are just sitting on sell opportunities, right? So either you have, and this is why I like the whole multiple entry, because you can close one, which this would have been the first one, right? You can close one and then just end up leaving a runner. If you're disciplined, you can see this with your eyes, and then you can get into multiple entries here as you go through, right? Then you go into scenario number 3. Let's wipe this away, right? So we had U-shape 1, U-shape 2. Now we're at U-shape number 3. We're beginning to see that we are making the lower lows and the lower highs, right? Now this one did not extend as high as the 61.8. But what's more important that I see that you see is that you can see that because price failed to close higher, you're going to expect a possible more downward movement because of it. And again, this could become, this is like another type of strategy to trade. And again, we'll be talking about this, but again, this could be nothing more than waiting for that break to happen, because you're going to have your little friend here confirmation that we're still on a downtrend, right? So we're going to set up a TP and we're going to draw into the next sell down based on break of that temporary 2 candle structure. Every candle has structure, right? Every candle has structure. So we're on a downtrend. We're only looking for downtrends. We're only looking for downtrends. So all of this is viewed. All of this begins to get viewed on a, hey Evan, on a smaller time frame, right? Now here's the one thing that you've got to start looking at. Okay, once you see kind of a big candle, right, engulf the other candles, right, you then want to go up and start looking at some of the higher highs. So once this candle comes back up to mid-level, and again, this will take a little time to get adjusting. I don't want to use the most recent high. I want to start looking at where price originally came from, because I want to give myself the best opportunity to look for reversals, even if I'm sitting on a 15-minute chart. Remember, we're still on a 15-minute chart. Okay, so whether you had taken this high or you even went down to a little bit more of the recent high, right? Once you see this big bullish engulfing candle here, you got to ask yourself, man, okay, they may start pushing price up. So I don't want to use the most recent candle here because that bullish engulfing candle, okay, told me, man, there's a lot of buying power coming in. So I want to go to some of the extended highs to kind of give myself a better perspective of a Fibonacci ratio if I'm looking to see if price is going to change. Because remember, price would have to close above the original area, okay, which is up here, if it's going to change the trend. So this is why putting that support level, look at all that happened. That's all we did, right? So as price came back up to the fib level, it gave you another push down, okay? It gave you another push down. Now, we take a look at this push down and we say, okay, where did this fib level reverse? Well, we were not looking for buys, but if we look at where this fib level reversed, let's make this one white. Ironically, it closed, or I'm sorry, it bounced off the 88.8. Why? It did not want to change the temporary trend that was happening here. So we kind of go into this, which you'll see me put in my charts a lot. Hey, we're trading between this level and this level. So now we're kind of trading in this consolidated level, right? But when you look at the big picture, and you'll see me put this a lot on you, and I'll tell you, hey, we have to have a break on one side or another. Like you should be able to see this right here, even without fib levels, and say, wow, if you didn't even have fib levels and you just traded section to section, right? Section to section. You traded the lows and you traded the highs. But at some point, there is going to be a closure. You hear me talk about this all the time. There's going to be a closure. The first closure happened here. And then what did price do? Price closed below. Price came back up to retest an area. And then price tanked after that. Okay? And still tanking. Okay? Still tanking. Now, this is pretty funny because if you look at this right here, where did price tank here? Does anybody want to take a guess? Again, it did not want to change courses. Where did price change? Let's go to this high right here. Right into the sweet spot. Right into the sweet spot. So what the sweet spot allows you to do is to tell yourself, hey, one of my rules is going to be that if I'm trading a big, a big time frame level or a small time frame level, that you can already see by just the examples we've given today that the 100 has to be compromised with a close, not a tap, with a close above if it's going to change this trend. And if it doesn't close above, I'm going to stay in this trade. It can go up in a wick, but if it doesn't close above, So the more that you see these levels, right, the more that you incorporate support and resistance, this becomes a lot easier because once you have a break of structure, which happened here. Remember, this was the break of structure. Break structure, retested structure, and came down. Once you have a break of structure, right, you should really only be sitting on the same direction as the structure. The same direction as the structure. If you look here, okay, structure had broken here in this candle. Remember, this was the big engulfing candle. So now you're looking for only pivot points of that structure break. Right? So this wrapped around, came to this low. There's your 61.8 to 88. Did it again here. Wrapped around. There's your back level down. Right? So you've got to just look at these things and say, and here, I'm going to extend this one again one more time just to extend it. Keep that same fib level all the way across. Okay? This came back up to the 88 and boom, dropped again. Right? Dropped again. So once we saw price coming up, and we just talked about it, we see bullish action. We need to go to the next level high, which is right here. And where did price reverse? Price reversed perfectly at that same area. So the more that you can train your brain, the more that you can begin to see these movements. I'm telling you, there's so much value in Fibonacci, okay, that you're not going to grab all. You're not going to take 100 trades and win 100 off Fibonacci, but you are going to begin to see the charts so much clearer, and you are going to know no matter what time frame, okay, no matter what time frame, because you can drop, and let me just go to another chart so you don't think this is rigged. You can go to any time frame, close any join, no joins, and you can begin to see that price begins to look at those levels, right, for, oops, okay, price begins to respect those levels, right? And again, this is what you're looking for. You're looking for U-shape type of action, right? So if you were sitting here and you're seeing buys going up, you're looking for that U-shape buy. And where did price reverse? Drastically. Same area. So you're going to see this happening over and over. Listen, everybody in the trading world, including market makers, know that everybody knows that the 61.8 is the golden ratio. They can't always reverse at the 61.8 dead on, or everybody would be sitting on seven-figure accounts, right? So they've got to swap it up. They're going to push it. That's why when you look at Brad's charts that he talks about, the waves are nothing more than these Fibonacci extensions. Sometimes they're going to run past the 88 to 100 and hit the extension. And that's why when price is at these highs, I always tell yourself, forget it. We're not going to try to reverse it here. And you'll hear me say this over and over. And if you've been with me long enough, you've heard me say, hey, just let them break the high. Let's try to get a better level up here, because the price action is making higher highs, right? Same thing that happened here with the drops, right? So same thing here. If you were to take a look at this daily, remember this is a daily. So you see this U shape and you start telling yourself, okay, let me throw a fib level here to where price reversed, right? If you see a big candle like this, that is like getting in front of a train, right? You would not want to get in front of a train. So these type of candles, you have to be able to recognize it and not be blinded to the fact that there are trillions of money that pulled price in one day from 91.30 to 90.34. So basically, 100 pips, right? You know how many trillions of dollars it is? When you see that momentum, this is where I say, forget this. We're not fibbing here. There's just way too much momentum coming down, right? What we're looking for is a break of structure to continue that structure. So guess what happens here? Structure eventually breaks here after they close. Watch this. I'm going to leave you with this. Structure ends up closing after the 100, right? That candle breaks below structure. Oh my Lord, what did price just do? Price just came back up and tagged structure. But from where? From the candle that took off, that broke structure. Throw a fib level on it. And where did we hit? Not only did we hit a retest, but we hit between the 61 and the 88, and price did what? Price melted after that for another 151 pips. So once you begin to, and again, we're going to be talking a lot about this on Sunday, and then over the course of the 2 days of the mastermind, showing you this over and over and over and over. It is going to be powerful that you can begin to train your eyes to see this, because you will be able to get to a chart, okay, no matter what chart that is. And let's see if you can pick one here. Let me pick one that I haven't used. Let's go to the pound chef maybe. Okay, and let's go over to a 1 hour. Hold on. Let's just take this little area right here. Okay. Just by looking at this, and this is why, you'll hear me say about the importance of, support and resistance, right? If you see this big candle here, that throws fibs out the door, right? That was massive movement up. But remember, before that happened, price started to move away from this area, right? You see price starts to move away from this area. What if you only did this, right? You see price moving away. So you know that price rejected here. And again, we'll be talking more about this, because this is like almost instant support and resistance. What if you say, okay, price is moving around here, it rejected here. You know me, I like to use like a white line. So you can use a white line, you can use a box, whatever you want for you, right? And then you just let price move around. Make it a little bit faster. And you start telling yourself, come on now, move faster. I want 1.3, I want 110. Yeah. Okay, so price is moving, right? And I think this is why the replay tool is so great to learn from, right? Price comes up and retags that area, right? But if you had a Fibonacci level that you were waiting for, this would be the example that we gave just a little while ago, right? You had to put it down here. You saw a clear reversal, right? And we never had the closure above the 100, but you had a level of resistance. So even if you took a trade here and you were wrong, meaning let's say we got this closure because you were wrong, right? And you were wrong 11 pips, would you be willing to give up 11 pips to ultimately, from your entry, have the opposition to grab 50 pips, right? Now that's a 5-to-1. That's a 5-to-1, right? And this is where currently price is at. That's a 5-to-1. So it's understanding that had price closed above the 100, okay, it's going to change course, right? And I'll leave you with one more example on the same chart just so you can see it. So again, we already know that if we did a fib level from here to here, right, that's going to be the 100 level, right? From here back to the bottom is the 100. Well, what did price do? It didn't. So you can almost set up a fib level and tell yourself, you know what, for this pair, I'm going to wait till it breaks structure, and then I'm just going to trade the direction of the structure. Well, guess what? There's your fib level, right? Level to level would be here. I'll draw it so you can see that there's no manipulation going on, right? If you had here, that would be your 100. Come on now, right? And then there's the closure. There's the closure below the structure, right? There's the closure below the structure. So now you just should be trading with the structure. So if you're trading now with the structure, you're waiting for, if you're going to draw a fib, you're waiting for price to come back up in this area, or you're waiting for your next confirmation, which again, this is why you should mix and match, right? But you've already got SARs coming down. So you're waiting for the next, and again, this is what we'll talk about. There's the one green candle that went up. The moment that breaks, that's your confirmation. We're getting in again here. We're getting in again here. Okay, we're getting in again there because obviously the buying power stopped. We had one red candle. Now this red candle could have come here and another green candle, but the moment we got this price action, boom, fell. So all you need is one candle with the direction. Remember, you're always going to get a pullback. This was nothing more than a retracement. That's all this was. A small minor retracement to the 50 level, and then boom, came back down. They're not always going to go to the 61. They're not always going to go to the 88. But you don't need that when you know that we broke structure. If you broke structure, we're looking for sells. Here's the confirmation candle right here. Not only did you already have SARs to the top, but here's your next confirmation candle because now we broke this level right here. If we went down to the 15-minute, there's this level. There's the level. So you could drop to a smaller time frame, right? And there's your confirmation candle. Boom. So much smaller candle on a 15-minute level, right? Much smaller candle. So we'll keep doing this. We'll keep showing you this so you can just kind of slow things down because sometimes we're too fast. And I'm guilty of that myself sometimes to really look at this. And that's why I put that thing out midweek. We're going to continue trading with structure on the structure, or, obviously other than gaps, or the big time frame sell stops, buy stops based on 8-hour, 4-hour SARs, because those are break of structures. Those are break of structures. Okay. So any last minute questions? This is a quick 30-minute session. I know it's Friday. It's a non-trading day, hopefully for you, or you've cut some pips, but no trading for me. But I wanted to give you a little bit of value on a Friday morning before heading out and enjoying the rest of the day on that. Okay. Dominique, kind of wrapping up right now. I'll do something else on CL, but it's going to work the exact same. It's going to work the exact same way. Just go back and watch the replay. Okay. Remember, price action is price action. Doesn't matter on what chart you're watching it on. Price action is price action. So the same action that you're going to look for on any chart, you're going to see it across the board. Now, keep in mind is that indices, crude oil are going to move much faster, right, than some of these other charts. So you've got to look at the fib levels the exact same way, but you may have to be a little bit quicker on making sure that you hit your entries and what have you. But maybe on the next session, I'll do another one of these maybe next month, and we'll look at CL again. But go back and watch the replay and look at the structure points, look at how the fib levels are set up, so you can kind of take a look at it. Okay, what is the start of your higher time frame? The 4 hour. 4 hour and 8 hour will tend to mirror each other. If there's a difference, I'll look at the 8 hour first. So I prefer the 8 hour chart. With regards to setting up the fibs, I like the 8 hour. Why? Because the 8 hour pretty much mirrors the daily. And I think that's where the most of the institutional money is at as well. Okay. Yeah, Dominique, in the mastermind, we're going to be giving you some examples and walking you through some of this stuff on every time frame. But I'm going to be including the 1 minute. Yeah. And again, the 1 minute could be a great place to start. If you're a scalper, I know a lot of people that just sit on a 1 minute chart. They only trade. They've turned a 1 minute chart into a 200 pip day because everything starts, we're not going to use seconds. Everything starts on a 1 minute chart, right? A trend can start on a 1 minute chart, but the 1 minute chart is going to freak out a lot of people because there's a lot of price action happening, right? So you got to stick to a set of rules, and it's much more difficult on the 1 minute. But yeah, I'll be showing you some examples on the 1 minute as well. Okay, hey, enjoy the rest of your Friday. Enjoy your weekend. Don't forget to be kind to someone today and this weekend. Go out and do something for yourself. If you made even $1 this week, it's so important that you take weekly withdrawals from your broker. It sends a message to your psyche that you're on the right path to success, even if it's $1. Okay, even if it's $1. If it wasn't a profitable week for you for whatever reason, then learn from it. But the next week that you're profitable, you got to take a little something for yourself. It's just a way that the psyche works. It's a way of paying you back. It's a way of celebrating small wins and small successes, which are much needed in this environment. Okay, you've got to celebrate small wins along the way because those things are going to be super, super important, right? Something that I've been practicing for a long time. And my first 3 years or so, that I was more destructive than constructive, right? And they were telling me that advice, and I never did it. I said, no, I'm just going to keep it in my account. Just going to keep it in my account, up and down, up and down. And it's something that works. Once you start taking weekly withdrawals, again, even if it's $1, $5, you're going to tell yourself, okay, I reap the benefit of my work this week. It's like going to work and not getting paid on Friday. You want to get paid at the end of your week, right? So you got to pay yourself a little something. You got to pay yourself a little something. That is going to be so, so important. Hey, you're welcome. You're welcome. Van Valina, thank you. So enjoy your weekend. Those of you that are coming to the mastermind, I'll see you on Sunday, 8:30 a.m. Eastern Standard Time, okay, for our first 4-hour session this Sunday. So I'll have my coffee ready to go, and we'll do a lot more of this over and over and over in the coming weeks, in the coming months, so that you can just begin to see this and just to be able to give you value. Again, you're not being charged hundreds of dollars a month. You're not being charged thousands of dollars for courses here. This is just something that I love to do, and I want to see all of you prosper. Even if your goal is to make $50 a week, hey, that's $50 a week, right? If you can come into a $7 trillion market and grab $50 a week, that's $200 a month. That can pay a bill. That's my goal. That's my goal for you. If you make more than that, that's awesome. But my goal is to help people stop living paycheck to paycheck and be able to give back and have some experiences. That's really what it's about. Okay, we'll see you soon. When this recording is done, I'm going to put this under the recordings. It'll be called the same thing, Fib 101 member training. So you will always have access to it. Just use the keywords, okay, and you can always find it in there. All right, have a great weekend, and I'll see you soon.